Hey folks, Dan Frio here, the rate update. Today is August 18th, 2021. We come back, I'm going to show you how mortgage rates fared for the day after the Federal Reserve announcement. So don't go away, we'll be right back. Okay, so I was even shocked with the news that came out. I thought the Federal Reserve was going to hint at the term tapering, but when they said it, they said, well, it's going to be at the end of 2021 or the beginning of 2022. It's kind of right in line with what I was expecting. Some news that came out today was a little bit shocking, and it's in regards to the housing starts. So there is a deficiency, believe it or not, in housing. So when you see housing starts start to drop, is that going to put more pressure on home prices, pushing them up? So here's the report that just came out in regards to home starts.
Meantime, Rick Santelli is standing by at the CME in Chicago with some breaking economic data. I want to get straight over to Rick. Rick, the numbers.
Yes, our July read on housing starts, a disappointment. 1,534,000. This is the weakest level since April. Of course, the high that we had was in it was in March, and that was the highest since '06 at 1.725 million. So we have come down a bit. Now, if we look at the permit side of the equation, it was actually a bit better than expected, 1,635,000. And if we look last month, of course, last month was revised from 1.598, so around 1.6 million, to just a 1.594. So very subtle revisions. Maybe these misses, of course, are for reasons outside of the big three, which are affordability, supply chains, and labor. But for the most part, if it is, it's hard for me to pick it out. Maybe going back to school, the cycle of when, homes sell, when people look at homes. These things, of course, eventually affect the building rates and the permit rates. But for all practical purposes, we are at a deficiency of new homes and starts, and that has been going on really since the credit crisis. That headline number was down 7% now from the revised 1.650, which stands at the June final read for starts. And I'm sure Diana Olick will dig through these numbers throughout the day. But suffice it to say, Andrew, that it probably isn't going to affect the markets as they're about ready to open in equities, and 1.27% on 10-year notes. We've been in a bit of a range. It's pretty simple trade, though, Andrew. As long as we're closing under 140, you continue to see yields top out in the high to mid 130s.
So that's great information from Rick Santelli. So let's dissect. Why are house prices so skyrocketed? The lack of inventory, and more people wanting to buy a home. You're in your parents' basement. You're renting. Rents are going up, skyrocketing up. You can probably buy a house if you can come up with the down payment. You could probably buy a house and have a lower monthly payment than you do renting. We're laying out a program, and I'm going to come up with it on Monday and lay it out to all you guys. It's a down payment assistance program all over the country, and it's going to give you up to 6% of the purchase price toward your down payment to help you there. So some of you guys might be saying, Dan, here you go. You guys are fueling the fire. Well, no, we're helping people buy homes that are wanting to buy a house. Rents are killing people. A lot of rents are going up 18% a year, and it's putting people out of the rental market. So again, I could show you numbers and how, probably 80% of our clients, when they buy a house, their payment is lower on their house payment than they are in rents. So, but let's dissect a little bit what Rick Santelli said. If you have July housing starts down, okay, that's less houses being built, okay, obviously. We already have a deficiency in home building, okay? That's based on labor shortages, supply chain issues, the cost of things, people being priced out because the cost of everything keeps going up, so affordability. So we see that. So we need more houses on the market. What's going to help that? Well, we're going to monitor the housing starts and building, but the other key piece here is what's going to happen to those in forbearance, okay? I had a conversation with a young lady from Texas today, and she says they're expecting down there a glut of houses to go into foreclosure that are FHA loans right now. As I thought about that, here's my thought process there. Many parts of, especially Texas, they've seen appreciation in the tune of 15 to 30%. So if you bought your house a year and a half ago, your value might be up 30%. So that means you probably have equity built in your home. So why do you go into foreclosure? Well, one, obviously, if you can't make the payments. The second thing is there's no equity in the home. Otherwise, you would sell it, take the extra money that's there, even if it's zero. It beats foreclosure because foreclosure is going to ruin your credit. And believe it or not, the deficiency balance you have, so let's say you got foreclosed on and then they sell it for less than you owe and it's 50 grand less, they come after you for that money. So then you might have to file bankruptcy and all these other things. But if you have a little bit of equity in the property, sell it and get out of it, okay? So the unknown here right now, and I don't even know what it's going to be, there's still 1.8 million people in forbearance, is when those people come out, how many are going to list their homes? Okay, that is the unknown. I don't have that answer. And I dig in and dig in and dig into that every day to figure out, what those numbers are going to look like, but I don't know. So let's get on, though, to what the housing market looked like and then what happened today after the Fed, or throughout the whole day, pre-Fed announcement, Fed announcement, after Fed announcement. What happened? You're going to like it. So the first thing is July housing starts are down 7% versus 3.2% is the estimate. It's double, guys. It might not seem like, it's only down 7. When you're expecting 3 and you get 7, that's double. Okay, that's not good news. All right, but on the mortgage rate front, what happened today? Okay, so it was actually shocking. I'll say that. I pushed out a lock order about noon, between 11 and noon today to lock in rates. I was wrong, but we didn't really miss out on anything because it dipped and then went back up to where we basically started the day. Okay, so and I'll explain that to you. What's happened in the last few Federal Reserve meetings is this. Federal Reserve meeting, poop. Okay, and if I go back, I can show you 2 other consecutive monthly meetings that the MBS market sold off heavily. What is the MBS market? Well, we follow this number here. It's a mortgage-backed security price. What's happening to the price of the bond? The mortgage-backed security bond that is the biggest component of your mortgage rate. Okay, so we watch this diligently. It's not the 10-year Treasury. It's not, for sure, the S&P 500. It's not the Federal Reserve. It's how the trading of the mortgage-backed security is going. Okay, so what we saw just about a week ago is this crash. I said that we were overbought, meaning rates were too low when it hit here, and I put in recommendations to lock in people as soon as we hit this Fibonacci level right here, because I signaled that is a reversal of this trend. So let's follow this. As this chart goes up, mortgage bonds, the price goes up, yields come down, meaning your mortgage rate came down. This is a crash. This is a big crash. And it was based on what the Fed's going to do about tapering. Okay, well, they came out today and said they're not going to really do anything right now. They're going to sit in the sideline and continue to wait. That weighed very well on the mortgage-backed securities market. So what did we see throughout the day? Well, look at this reversal. We went through the day. We opened up right about here. We went up a little bit, and then we kind of dropped all the way back down. You can see right before the Federal Reserve notes came out, there was a lot of selling right in this range here. Okay, what selling means is you're selling the bond, pushing down the prices, pushing up the rates, mortgage rates. Federal Reserve news came out and we spiked way up. We had a little bit of profit taking and then we boosted back up. So we ended the day up 6 basis points, which is fantastic because in the normal cycles that we've been seeing, we've been having crashes and pretty dramatic crashes. So the economic calendar for today was basically the housing starts came out and they were bad. Building permits came out and they were right in line, which is good. That was really good news. The bond auction came out and that was really good. And the Federal Reserve notes came out, minutes came out, and that helped the market. So what happened today with rates? Well, it was good because basically nothing happened. I'll take stability versus a spike in mortgage rates. So today, what I follow here is what Black Knight reports. And what they do is they survey mortgage lenders like ourselves. every day to see where 30-year mortgage rates are. So this is the easiest way. The normal loan out there right now is a 30-year mortgage. So if you're looking for a 15 or a 10 or whatever, please reach out to us. We can customize this rate for you. These are not my rates. These are basically rates throughout the country, just to give you an idea where rates are moving. Again, these are not my rates. To get your what rate I can do for you, please, I'll give you the information at the end of this, where you can reach out to us by call, by a Zoom meeting, or by just applying online. But the 30-year conforming rate today is 3.05, Jumbo 303, FHA 315, and VA 2.69. Here's the nice thing. One-day delta. Delta means change. So over the past day, we've actually seen rates go down a little bit. 1 basis points equates out to, in numeric terms, 0.01. So basically it's nothing. So nothing. I'll take that all day long, other than this spike in rates that we saw from the beginning of January through the end of March. Look at that. Look at that jump in rates. It was about 75 basis points, or 0.75%. All right. 7-day delta. So the 7-day change is basically flat as well. Okay. You really aren't going to see a rate change until you start seeing 10 basis points or more. Okay. So that's that. And then the 4-week delta, actually we're up from where we were about a month ago, but very, very little. It's so minute that you probably wouldn't even see a rate change. So that's my report for today. I hope you like it. I hope you find value in the channel. If you do, all I ask is please give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. I try to make the comment at the end of my title something relevant to the video, so you know, should you watch it or not, and it'll see if it tickles your fancy or not. The best way I ask people to do this is, if you want to compare mortgage offers, which you got from somebody else, for what we can do, please email me a copy of your loan estimate. I'll review it, write all over it with a red pen. Actually, we got 4 in today, and I was able to beat on 3 of them, and we were able to save the people a ton of money. But if you haven't refinanced yet, if your rate's over 4, please let us know. If you got back to work and you got a bunch of bills and you're like, would this make sense to pay off these high interest rate credit card bills with a mortgage? Let us know. And we'll do a mortgage consultation with you. I'll show you how to do that next. If you're looking to buy a house, we'd love to consult with you, answer any and all questions you have. Usually there's 1 or 2 of us on the call to answer. Make sure you get the precise answers that you're asking. If you're building a house, there's a lot of questions there from the builder and so forth, so we can help you there too. If you're in a forbearance, all I'm going to ask you to do is please set up a consultation with us. So how do you do that? Well, the best way to do that is this. Sorry to turn my head on you guys. Is go to my website. It is therateupdate.com. Okay, this is my home screen. You can give us a call at 844-775-LOAN right here. Another way you can do it is you're going to hit here and apply now. All right, and you're going to start the mortgage process. It'll take about 10 minutes. Don't drive yourself nuts. I don't need like account numbers on your checking accounts and all that other stuff. You know, be as precise as you can on some things, but don't drive yourself completely bonkers. When you finish, I'll get an alert to know that you've put in your application. Usually if it's during office hours, somebody will give you a call within probably 20 minutes or so. If it's after hours, we'll get in touch with you first thing in the morning. With the hot item that we have right now is what most people are doing, and we have, I can't tell you how many of these a day we're getting, is they're hitting schedule a meeting because you have questions and you want answers. Most of my team, we've been in the business at least 15 years plus. I've been doing this for 33 years. You click here. You'll see the dates and times available. You just click in there, and then you let us know what day, what time, and how do you want to do the meeting. You want to do it by phone or Zoom. And then on that day, at that time, expect a call or a Zoom conference with us. So that's it for today, guys. God bless. Stay safe, and I'll see you tomorrow. Bye-bye.